According to a detailed report recently issued by Goldman Sachs, copper prices are expected to climb drastically over the next year. This demand surge is driven both by the reopening of the Chinese economy, with the relaxation of COVID-19 rules, as well as the growing demand for copper in the global effort towards decarbonization. The supply of copper stands as being one of the most complicated among metals, with most of its sites located in politically challenged areas, such as Latin America and Southeast Asia. Most top analysts agree that 2023 will be the year of a deficit for copper rather than a surplus, given the prevailing circumstances. Moreover, inventory levels of copper are their lowest in over a decade. All these conditions point to a raging copper bull market, which could see the spot market rise to record highs. Players in the copper industry would be seeing rapid top and bottom line growth as a result, and epic value delivery to its shareholders. For those seeking exposure to this lucrative new metal, look no further. In this video, we bring to you the 5 top copper stocks that could break out in 2023. The first stock on our list is the mid-sized Canadian company, Capstone Copper Corporation, which trades in the Toronto Stock Exchange as CSCA. At its present stage of operations, the company is barely breaking even, but it has played its cards highly strategically and has a stellar roadmap ahead of it. Despite revenues of $309 million in the third quarter of 2022, Capstone Copper had still gone on to report an operating loss of $22 million, primarily to the high cash costs of almost $3.90 per pound of copper. A large reason for these negative figures had also been its depreciation charge of $46 million, as well as the impact of a provisional pricing mechanism. In fact, Capstone's pre-tax income stands at almost $65 million. A game-changer for the company is its acquisition of the company, Hudbay Copper, which will see its annual copper production climb from 185,000 tons to 260,000 tons by 2024. This would truly allow Capstone to benefit from the anticipated copper demand surge of the coming year, while also massively driving down production costs through economies of scale. Similarly, the company is also engaged in a massive expansion of its MVDP copper sulfide processing facility. The move will not only cut down cash costs per copper pound from $3.90 to less than $2, but will also enable byproduct revenue generation through almost 900 kilograms of gold per year. Capstone has already spent $490 million, out of the total $825 million of capital expenditures towards this. Upon completion, copper production via this site alone will see a surge from 49,000 tons to over 120,000 tons. CSCA is clearly a stock on the verge of an epic takeoff. Investors that are quick to hop on this train can benefit tremendously from its rise. The second stock we look at is the diversified copper play, Hudbay Minerals Inc, which trades by the ticker HBM. Copper makes up 60% of Hudbay's revenues, whereas gold, a crucial byproduct of copper mining, makes up 25%. The remainder includes metals such as molybdenum, silver, and zinc. The company's copper sites in Canada inherently have a high presence of gold ores, which drastically brings down net costs of extraction, giving Hudbay a significant competitive edge. In fact, these conditions make the company one of the lowest cost producers of copper in the world. This positioning would likely entail HBM taking off drastically with the oncoming copper demand surge. When taking a look at the asset structure Hudbay Minerals holds, we come to see how sensitive its future is to the price of copper. In addition to its copper mines in Canada and Peru, it holds development sites in Nevada and Arizona. The management has elaborated that a 10% climb in copper spot price results in a 40% climb in the company's net asset value. For those looking to get a hold of a stock with strong exposure to climbing copper prices, Hudbay Minerals may very well be their best bet. The company further plans on drastically upping copper production by 2025, which would result in spectacular growth. The stock therefore is a screaming buy. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. For number 3 on our list, we take a look into one of the giants of the global copper industry, Freeport-McMoRan Inc, which trades by the ticker FCX. With several copper assets situated in North and South America and Indonesia, along with its market capitalization of $55 billion, FCX stands among the global copper industry leaders. This makes it a prime beneficiary of copper price takeoffs. In an industry with high barriers to entry, the company forecasts an inflation-adjusted operating cost of $1.55 per pound, giving it a wide profit margin with the copper prices presently at $3 per pound. If copper prices reach $4.55, Freeport could see a surge in its top and bottom line figures by the high double digits. In fact, FCX laid out its forward-looking guidance in terms of price sensitivity such that every 10-cent increase in the global price of copper will result in an EBITDA climb of $425 million. If Goldman Sachs' projection proves accurate, the company could see its EBITDA figure rise from $10 billion to $16.3 billion by the following year, resulting in a surge of profitability. This would be more than enough to cover the company's capex forecasted at $2.7 billion for the following year. Considering that FCX stock has dipped by 6.5% in 2022, now may be a good time to invest in the stock. Doing so would allow holders to gain direct exposure to the copper price takeoff, in a manner that is better than most players in the game. Moving on to number 4, we turn to take a look at Southern Copper Corporation, which trades by the ticker SCCO. America's Mining Corporation holds an 89% stake in the company, with 11% held by the public. Southern Copper is distinguished by several factors, which makes it highly attractive from an investment standpoint. For one, its 42.4 million ton copper reserves is the highest of any listed copper company in operation. Similarly, it has established itself as a prominent player in the global markets, with its operations dating back to as early as the 1950s. As a result, it boasts healthy, fully organic business growth, without the need to engage in mergers or acquisitions. As per its latest published annual reports of 2021, Southern Copper saw top and bottom line growth of 36% and 116% respectively. Its fundamentals, fueled by both copper and byproduct revenue, appear rock solid, and the company has been investment grade since 2005. Owing to its technical expertise, as well as its scale of operations, Southern Copper boasts an extremely advantageous cost structure, of barely 82 cents per pound of copper. Moreover, the company plans to spend, on average, $2 billion on expansion efforts through 2029, to take advantage of the secular demand growth with the global decarbonization push. Management predicts that by 2026, free cash flow will see rapid acceleration, regardless of the spot price. The company thus has sustainably worked on a forward-looking win-win strategy. The stock is a clear winner for those seeking long-term exposure to copper. The final stock on our list, and far from being the least, is the mid-sized Australian pure-play copper player, OZ Minerals, which trades in the OTC markets by OZMLF. The company operates fully fledged in its production phase, and thus has already successfully developed its standing in the market, delivering over $1.5 billion in revenue during 2021. Not only is OZ Minerals one of the few copper players to lie in the production curve's first quartile, but also operates in a Tier 1 jurisdiction, with its primary sites located in the Southern Australia zone. Its Carrapateena project is the second largest across Australia, and holds a 20-year expected lifetime. The mine's gold byproducts drastically offset copper extraction costs, which are already efficient through Oz's state-of-the-art infrastructure. Similarly, the company's prominent Hill project comes with a 14-year lifetime, and is Australia's fifth largest copper site. Remarkably, Oz Minerals holds an option to purchase the Kalkaroo site, the sixth largest Australian copper asset. Upon being exercised, the company could see its annual copper production climb annually by 30,000 kilotons. It thus has a clear route to scaling upwards, in the event of heightened demand, delivering to it a clear strategic advantage. Furthermore, its capital expenditure remains highly sustainable and in line with its growth. With a net debt-to-EBITDA ratio of 0.11x, debt management remains strong for the company, facilitating healthy profitability. This is in large part why the company has drastically outpaced the growth of its peers since 2015, with impressive shareholder returns. The stock is riding an epic growth wave, and is among the best to hold in the upcoming copper bull run. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio holds ample exposure to the exciting domain of the copper industry. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.